Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the FX majors and the dollar index going into the week 19th of August 2019. Going to start off with the dollar index, highlighting chart formations and our bespoke support and resistance levels, and basically trying to forecast what we believe is going to happen in the FX majors this week. I think there's two interesting setups going into this week. We're seeing some support level close to Friday's close in dollar CAD. That's probably going to be one of the favoured long trades. And then euro sterling, we saw an aggressive move to the downside last week. That's left a bearish outside candle. Looks to have completed an Elliott wave 5 wave count to the downside, so really we're going to be looking at selling into rallies. There's also been some news out over the weekend which I believe might be quite negative for sterling at the open. So if sterling moves to the downside, euro sterling should move to the upside and probably gives an opportunity to get short of that cross. So anyway, let's go to the dollar index first. And again, this dollar is relentless. We've seen 5 waves to the downside. This is the weekly chart. And then this very choppy price action higher. We've seen bearish outside candles. We've seen pin bars, all close to this 61.8% fib level here. This 3-wave combination formed an evening doji star pattern. Now that formation is often an indication of an end of a trend and the start of a new downward bias. But like we're saying, you know, the dollar's resilient. We didn't even see any move to the downside at the beginning of this week. And in fact, we've seen a decent recovery higher. So we can't write off further gains in the dollar index. There are warning signs. We've got a 5-wave count to the downside as far as Elliott wave is concerned. And we've also seen some mild selling pressure close to the 61.8% fib. But at the moment, we've really still got to be looking at buying dips in dollars unless we get an aggressive move in the other direction. So reflecting that back onto the FX majors, and we're going to go to Eurodollar first. A weekly chart opposite of what we saw in the dollar index. We've got a morning doji star instead of the evening doji star. So morning doji star often indicates the end of a trend and the start of a new upward bias. We're also in this wedge formation. The wedge formation has a bias to break to the upside. So all these combinations really should say, well, we should be buying into dips in euro dollar. But again, with that dollar bias and with that dollar buying being quite relentless, we're still seeing rallies being sold into in euro dollar. And we can see that every time we get close to this 61.8% fib level, which is located at 111.80, we're actually getting selling interest now. Going to the intraday chart, this is the 4-hour chart, 5-wave count to the upside. Looks like a flag formation, but we failed to break higher. Really this week we've got pretty decent resistance located at 111.36 to 111.40. That level needs to be clearly broken to even moderately consider that the euro dollar sell-off has come to an end. Cable, let's go to a bigger time frame. We've got warning signs here. Out of all the G10 currencies, cable actually had the strongest buying last week, which doesn't really reflect when we look at this chart, the sterling dollar chart, and that just goes to show how strong that actual dollar recovery was. So we have broken to the upside. We had 4 days of inside soldiers, and then we broke to the upside on Friday. Levels close to this 261.8% fib at 120.33 found some buying interest. However, a lot of sterling crosses on Friday highlighted exhaustion counts. We did see a mild move to the downside off the top of that rally. Going into this week, we've got bespoke resistance located at 122.11. We've got bespoke support located at 121.10. Might see a bit of choppy price action between those two support and resistance levels. Really, the long-term bias is still to buy into dips. I think, especially now we've got that 261.8% fib located there. Could maybe form a bullish reverse head and shoulders pattern. Remember, I said I believe there's been some sterling, well, some news over the weekend that's going to be negative for sterling on the Sunday night open. We've got a trend line support, possible right shoulder located at 120.27. At the moment, again, I think the bias, what we'd like to see, is a move higher to sell into sterling. But if we also move to this downside and we get a bullish reversal candle formation, then we'll be looking at buying into dips around about 120.26. Dollar Swiss. This is the daily chart. This shows some real mixed volatile trading. I've posted these two 13s here. These are DMARC counts. It highlighted the high, it's highlighted the low. However, we're still expecting some pretty choppy price action. 98.70, 98.75 is a prime resistance level going into this week. We prefer to sell into rallies in dollar yen. Now, sorry, in dollar Swiss. Dollar yen is a real mixed picture. Let's go to the higher time frame. This is a weekly chart. Broken the triangle formation to the downside, very complex wave patterns. Really, that should indicate that we will make a new swing low, possibly sometime in 2019, coming lower in this leg. We did see a retest of the breakout level, and we've moved to the downside. But last week, we saw pretty sort of mixed volatile trading again in this pair. We have ground higher, if you like. Our prime resistance this week is at 107.17. 107.18 is a 50% fib level. 107.17 is our bespoke resistance. If we break there, then to the upside we've got 108, the figure. So still looking at selling into rallies in dollar yen. Now this is the one that I want to concentrate on, at least at the beginning of the week. Now this is an expanding wedge pattern. This is the weekly chart. It has an eventual bias to break to the downside, but this is not an impulse move lower. The move higher has caught a bit of selling interest above that weekly Ishimoku cloud. But if we go to this time frame, again complex wave patterns, that move higher from the top, that could be just seen as a fourth wave correction. So 1, 2, 3, 4, and then a move to the upside. It is pretty mixed picture, but and especially when we go down to this time frame, this is the 4-hour chart, this highlights an expanding wedge. Now an expanding wedge has a bias to break to the downside, so we've got conflicting views, but what we have got is we've got bespoke support located at 132.51. We've got a trendline support located at 132.30. We've got various Canadian crosses highlighting or very close to exhaustion counts, Euro CAD, CAD Yen and CAD Swiss. So there is real scope for a move higher in dollar CAD, I believe, at the beginning of next week, or at least that's what I'll be looking for. Aussie dollar, mixed volatile trading for 9 days. That's caused a channel formation. Could be a flag pattern. Trendline support is located at 67.42, a break of 68.15, and the measured move target is up here at 68.83. However, I'm not sure if we're going to make that level. I've got bespoke resistance located at 68.36, and I've also got a 38.2% fib level located at 68.32. So to start with, well, I'm going to be looking at selling into rallies around about this level. If it doesn't hold, then this is going to be the target level. But at the moment, you think about Eurodollar, we're selling into rallies. Cable, we're selling into rallies. So really Aussie dollar, we should be selling into rallies, and dollar CAD we're buying into dips. So we've still got that dollar bias, if you like, going into this week. Now Euro sterling, this is the another interesting major, at least. Bearish outside candle posted on the weekly chart. That candle formation is often an indication of the top of a trend and the start of a new downward bias. If we go to the intraday chart, like I said, we've got some fundamental news, Brexit news, Bojo news, if you like, about whether or not Labour is going to, or Jeremy Corbyn's going to try and put a stop to a no-deal Brexit. We'll have to wait and see where sterling does open up, but that bearish outside candle on euro sterling looks to have completed a 5-wave count. Now, if that is correct, then we should see a corrective move higher. I've highlighted what could be a bearish head and shoulders pattern. So this would be the head, left shoulder, this neckline with Friday's low causing the neckline, and then a move higher to potentially form a right shoulder. Now we've got, if we just put this tool on here, price label. So we've got a trendline resistance around about 91.92, and we've got bespoke resistance at 92.05. I'd favour selling into that rally than buying into that dip going into this week for a right shoulder and for a probable Marabuzo level midpoint of the open and the close of that bearish outside candle. So long-term bearish, short-term bullish in euro sterling. Euro yen, again, we've got just mixed volatile trading. Levels close to the 261.8% fib at 117.42. Continue to stall this downward pressure. If we go to this time frame, looks to be a wedge formation. It's not a very aggressive wedge, and what I mean by that is normally if you get an aggressive wedge formation and then you break the upside, which would normally happen, the measured move target is the start of the wedge. So if you look here, it's 45, the break of the wedge, or maybe a little bit lower now, maybe around about 40, but the target level is only at 90. So your risk reward is going to be pretty skewed with only a 90 pip target for this potential wedge pattern. What we have got at the beginning of this week is that we've got trendline support at 117.40. That's very close to that 261.8% fib that we've just mentioned on the other time frame. And to the upside, we've got bespoke resistance located at 119.10, and that's pretty close to this trendline resistance at 119.40. So again, pretty mixed picture. Potential to buy dips, I believe, but also our favoured trade is still to sell into rallies in euro yen at the beginning of this week. Okay, guys, hope you found that informative, and we'll be back soon with some more video analysis. Many thanks.